Well, good day. Thank you for joining me. And we've got an interesting bit of information today. We have the Black Knight monthly mortgage report that came out today, and some really interesting information on there. Going to the front page, we're seeing record high uh, mortgage payments right now. Nearly a quarter of the new mortgages that are going out for new homes are facing $3,000 payments, principal and interest payments or more. In July, the average principal and interest payment uh, was at 2306. That's before taxes and insurance are included. So the average principal and interest payment on a mortgage in July 2023 was 2306. That's the highest principal and interest payment and has risen by 60%. 60% over the past 2 years. Wow. That's a huge rise in payments for a house. Um, Not that I don't know, but you just look at that and it's a big number. Um, Nearly a quarter of the new purchases have payments of $3,000 or more, and that's up from 5% in 2021. So that's over 400 times, 400%, excuse me, greater in 2023, having a payment of $3,000 or more. Big numbers that just came in. Let's go to the next slide. This one's getting a little depressing. Next slide is just some basics on the delinquency rate. And what we're seeing here is mortgage performance overview. Delinquency rates are holding pretty nice and steady. They are up 9 basis points, but foreclosure starts are down 6%. Prepayment activity is down, which is to be expected. But basically, the delinquency rate is holding very steady. You can see that right here. National delinquency rate for first lien mortgages sitting at 3.21%. And let's see here, mortgage delinquencies by severity. That is really holding quite steady. Whether we're talking 30 days, 60 days, 90 days, those numbers are looking pretty steady right now. Let's see here. Next chart we have is loans rolling to a more delinquent status. And let's bring up that chart here. And you can see loans rolling to a more delinquent status. Again, those are pretty steady numbers right now. Nothing is shooting up. It's just nice and straight line. Nothing's going haywire yet. And if we move on to the next slide, will be real quick on this one. This is just curious to the current DQ bucket, which is the delinquency bucket. Again, it's nice and steady. We'll move on here. This is an interesting chart. We've got the Fed funds rate versus the 30-year conforming. You can see how they move in lockstep, and you can see how the Fed funds rate, how much it's risen, and how the 30-year fixed rate mortgage has risen in conjunction with the Fed funds rate. Interesting chart. Next chart. This one's a good one. We're looking at this particular one is the purchase rate lot counts by the week and by the year. So what we're really looking at right here is a weekly data of the lot counts for purchase rates. Let's see what we have here. No, that's not. That is the 30-year fixed, and the spread between the 10-year treasury, sorry, I didn't write the banner down, the spread between the 10-year treasury and the 30-year fixed rate. And that spread is actually widened out in the gray area. You can see it's almost hitting 300 basis points, which is pretty high. Now we're going to get to the purchase rate locks. And purchase rate locks by year and week. And you see the red line that we're seeing is this year, 2023, and rate locks are way down, down big time. And then again, here we go with purchase interest rates and rate lock volume. And this is actually daily volume, goes back to the start of the year. And you can see down below how the rate lock volume has come down so much. Big move down in rate lock volume. And that's about it. I just thought these were kind of interesting charts. Wanted to share them with you. If you have any questions, please feel free to give me a call or email me at dmellis at nexamortgage.com. Anyway, hope you're having a great evening, and we'll talk soon. Bye-bye.